JJ the CPA here. We're going to talk about something that various states are doing to try and do a workaround this new $10,000 limitation on state and real estate taxes up at the federal level. So under this new law, whatever your state taxes are, including your real estate taxes or anything related to sales tax that for some reason you'd be able to deduct, the maximum you're able to actually take advantage of as an itemized deduction is $10,000, period. So if you're in a state that you pay a state tax, or you're in a home and you're paying more than $10,000 in real estate taxes, focus in. You're only going to get $10,000 of that as a deduction. So here's what some states are doing, okay? New York, New Jersey, and there's other states that are looking at implementing this, which is this. The states are setting up charities that the state is sponsoring. And therefore, if you give money to that charity, you're getting a charitable deduction. And then the money that you've given to that state-sponsored charity, you're able to get as a tax credit against your state taxes. This is not in play in the state that I'm in, Oklahoma. But if you're in a state where they're doing this, here's what you need to know. It's not going to be allowed. The IRS has a revenue ruling that's going to be released, and they're going to show how that is not going to be something that will be allowed, because if it walks like a duck and it quacks like a duck, then it's a duck in the sense that that is just paying state taxes. It is not a charitable contribution. There's going to be controversy over it. I guarantee that the IRS will challenge it, but where it will probably be resolved is in the courts, so we probably really won't know the answer to this for 2 or 3 years. But any clients that I would have that would be potentially looking at taking advantage of this, I would tell them not to take advantage of it, because I think they're going to lose. When it goes to court, they're going to lose in the sense that if you're giving to a state charity, but that state charity is giving you a tax credit, and that's a new charity that came into play just for this tax law, all of that just smells like what's called a sham transaction. Not scam, a sham transaction. And the IRS collapses sham transactions because they aren't what they seem. All right, hey, thanks for tuning in. And if you like my video, I'd love it if you subscribe, and I would appreciate that. And then don't you ever forget, you've never met a CPA quite like me.